Before the year 2008, the entire mortgage industry operated in a highly precarious landscape, with very few centralized guardrails to protect everyday consumers. At the time, there was no unified system to track the people writing loans. This lack of oversight meant that if an officer pushed a client into a disastrous contract, they rarely faced permanent professional consequences. If banned in one state, an unethical operator could simply cross state lines and open a new practice immediately. This loophole allowed the rapid spread of predatory loan products, highly profitable for brokers, but unsustainable for borrowers. This unchecked environment of high-risk lending became a primary trigger for the 2008 financial crisis. The ensuing market collapse demonstrated the immediate need for a unified federal system that could track individual actors and enforce a standard of structural accountability. In response to the crisis, Congress passed the Secure and Fair Enforcement for Mortgage Licensing Act, commonly known as the SAFE Act. The law mandates that every mortgage loan originator, or MLO, must renew their professional license every single year. This renewal isn't rolling. It occurs within a rigid compliance window between November 1st and December 31st. To complete this process, MLOs must submit to ongoing background checks. This allows regulators to identify recent financial crimes or ethical violations that would disqualify an individual from the profession. The SAFE Act also established the Nationwide Multi-State Licensing System, or NMLS, to act as the technological framework that tracks these individuals across state lines. Through the NMLS Consumer Access Portal, any consumer can instantly verify an MLO's employment history, active licenses, and any past regulatory disciplinary actions. This system treats a mortgage license as a temporary privilege that is entirely dependent on an individual's ongoing ethical conduct. Beyond background checks, there is a second requirement for the annual NMLS renewal: continuing education. To stay licensed, MLOs must prove they have completed a minimum of 8 hours of approved annual education. These hours are specifically allocated to 3 core areas: federal law, ethics, and non-traditional lending. This constant re-education is necessary to keep MLOs updated on shifting rules, such as new artificial intelligence policies and updated disclosure protocols. Institutions like the Ameritrain Mortgage Institute provide this mandatory NMLS-approved education to the industry. By providing the curriculum for these renewals, Ameritrain acts as a key partner in maintaining the competency and accountability of individual originators. While background checks filter out bad actors, this mandated education serves as the primary defense against the ignorance and lack of transparency that led to past financial failures. The implementation of annual renewal cycles has transitioned the mortgage industry into a highly accountable profession. The requirement for annual background checks and the public tracking of licenses has removed the anonymity that previously allowed unethical actors to operate. By forcing a focus on federal law and ethics every 12 months, the industry has shifted away from the reliance on the overly complex loan products that dominated the pre-2008 market. The opacity of the past has been replaced by a system where an originator's history and education are part of the public record. Through the combination of NMLS tracking and the ongoing education provided by partners like Ameritrain, the mortgage industry now operates with the transparency required to protect the average consumer.